Hello, welcome back to another Trading Diaries episode. Today, I'm about to drop the real sauce. My real realizations. I don't know if I could be I don't know if we could say I have sauce. I'm still I'm not making millions of dollars from trading. I wouldn't say that I'm definitely in drawdown. I'm not the best like trader ever, but I'm coasting through. I'm still learning, but I had a massive realization today. I feel like I don't even know. Like if you just imagine someone like with like 10 monitors in front of them like connecting the dots of like how the universe was discovered. That's how I felt when I was doing the math on this. I have these pages because while I work my part-time job, I usually listen to videos or like audios, podcasts, things like that about trading to try and, just while I'm like answering emails and whatnot because I'm lucky enough to have a job where I sit down on a computer, so I it doesn't affect my actual work too much when I'm listening to these things in my ears. But I have a piece of paper usually to the side of me, just jotting down some notes. And today I figured out how to properly understand risk when it comes to funded accounts because I've been talking on a lot of these videos about about scaling up my trading because I feel like I'm ready to get to the next level in my trading because I I'm not making millions. I'm still in drawdown year to date, which sounds crazy, the fact that I'm saying I want to scale up, but I've learned a lot and I don't scalp, so unfortunately I don't get trades every single day. I intraday trade, so if you guys don't know what that is, it's basically I take only a few setups a week, so I'm trying to aim for 3 setups a week. This week I had to take 2 days off trading because I was out of reception. But what am I saying? But hello, my brain. But yeah, I added in a new instrument this month. I've just started live trading Nasdaq. I just demo traded it for a month and was profitable in that at a 75% win rate. But I'm learning. So in that time that I was testing, I had one loss, and that one loss was taking a trade in pre-New York session. And obviously, Nasdaq is a predominantly New York traded instrument. So that was one of my silly mistakes. So for me, what I like to do to improve my trading is just avoid making silly mistakes. So I've taken many silly mistakes in my journey, one of them being doubling down on a losing trade. So trying to reattempt taking entries when I'm not realizing where I'm not letting go of setups, or taking setups that are out of session, taking setups that what's another one? Where I'm not waiting for confirmation. I don't wait for the confirmation. I took the setup and it ended up losing. Like, so that's why I'm kind of taking such a minimal amount of entries. But anyway, bit of a ramble. But the real deal of what I'm trying to tell you here is I was trying to figure out, because funded accounts, obviously you pay so obviously there's two different pricing styles of funded accounts. So there's your monthly fees and your fixed fees. I don't really agree with the monthly fees. I feel like that is just, I don't know, I just don't really agree with it because it's like it's kind of forcing you to take trades in order to be quote unquote profitable on the month. Because what if price action isn't looking good, and it would be crazy if you didn't get a setup all month. I almost didn't get any setups last month. I got one, which another one of my mistakes is doing my lot size wrong, so I had to figure out how to get the hell out of the trade because I risked 10 times more than I was supposed to. Anyway, I spoke about that in a different video. But what if price doesn't give you a good setup? If you're a beginner and if you don't already have $10,000 in the bank, but you're just trying to make ends meet, you're trying to make trading work, and you have to pay like $200 a month or like $150 a month just to keep a funded account, even though price isn't giving you any opportunities, it could weigh on your psychology. I would imagine it would definitely weigh on my psychology. I could definitely get through it. Like, it's not the end of the world, but it definitely would weigh a little bit on my psychology. I'd be a little bit like, maybe I should just take this entry because I haven't taken any trades this month, instead of being like, this isn't a good entry for me to take. I have no reason to take this entry. I'm better off preserving capital than coming out with a loss. Do you know what I mean? But then there's your one-time fees. So that's kind of what I'm looking at the moment. So that's where all these calculations are coming from. Obviously, I understand that once you pass your evals, some prop firms allow refunds on the fee of the account, and then and then obviously you can just, get a payout afterwards. But basically, what I'm trying to say is I did math on 3 different account sizes. So basically, I was trying to figure out, because typically in a prop firm, you would have a 6% max drawdown. I don't really need to look at the daily drawdown or the daily loss limit, because I'm only going to be risking 1% of my account, and I only take 1 trade a day on each of my instruments. At the moment, I'm only trading 2 instruments. I'm only trading gold and NASDAQ. I've never really had a day. I think I had maybe 1 day where I had perfect setups on both of those instruments, but then again, that's only 2% risk. But if that were the case, then maybe I would just risk 1% on one and then 0.5 on the next one. But that's a later story. Like, it's really fun. That's not something I have to deal with right now. But anyway, what I'm trying to say is the max drawdown is usually 6% of the account. So risking 1% of the account is going to be 6 trades. Risking 2% is going to be 3 trades. Risking 0.5% of the account is going to be 12 trades. So we're going to be going with 6 trades for all of these calculations. I hope you guys are following. Let me know if I'm talking too fast. But basically, I've been talking about how, because I trade on a $2,000 live account, I am definitely more in favor of live accounts, even though these funded accounts, when I'm doing the calculations, they do seem really good. I'm still a believer of a live account because I like to have full control. But unfortunately, I don't have millions of dollars to invest into a live account. If I did, I would invest it, but I unfortunately do not. So we've got to figure out a way to scale up the account in a way that's going to be financially responsible, but then a way that's also going to set me up for success, if that makes sense. So I've been talking about wanting to risk 2% of my account. So I've wanted to take my risk from $20 per trade, which is like, it sounds crazy, it sounds really low, but it is what it is. It's the correct risk management strategy in terms of percentages. I don't know. We can get into that. If you have any questions, let me know in the comments and I can probably speak about it in my next video. But I'm going from $20 risk to $40 risk. And that means that, yeah, it's a 1%, it's a 1% risk increase. But what I did was I did some calculations on each of the prop firms, and I was like, okay, so if I'll go through the examples and then it might start making sense. So if I want to trade with a 5K account, I'd been thinking of doing a 5K account to start with, just so I can get a feel of what it's like trading a prop firm, rather than, getting in with a big one and not actually understanding it and not going through those silly lessons, like, say, connecting your prop firm to, all of those just finicky things. Like, for me, trading my live account is my lot sizes. It was things like how to use MetaTrader, like all of that stuff. Trying to get through that on a 5K account. So I was doing the calculations, and a 5K account for me is going to cost me 80 Australian dollars, so 80 AUD. With 6% drawdown it was 6% drawdown, risking 1% per trade, I will be risking $13.33 of my money. Of the prop firm money, of the money that is on the account, so say I'm risking 5% of 5K, that is $50. But I'm actually only risking $13.33 of my account. And then for a 10K account, that will cost $135 for me. With a 6% drawdown, so doing over 6 trades, so it would literally be the account fee divided by whatever your risk is going to be and how many trades you can blow through, if that makes sense. So if your drawdown is 6% and you're looking to risk 1% per trade, you obviously have 6 trades to work with. 6 losses in a row would be you blowing the account. So you'd be doing 135 divided by 6, and that comes out to $22.50. So on a 10K account, every single trade that I take, I'm technically risking $22.50 of my money, because if I blow through 6 trades, I'm going to be losing $22.50, and that would be the whole account size. Same thing on my live account. If I lose 6 trades in a row, I'm going to be losing $22.50. You guys kind of clocking what I'm saying? And then on a 25K account, that would cost me $276, and I'd be risking $45.98. So $46 basically I'll be risking per trade. Do you guys get what I'm saying? So on a 25K account, if you were to do, okay, what's 1% of 25K? That is $250. So essentially, on the prop firm, yes, we're risking $250, but realistically, when you're looking at the account fee, we're only risking $46. So when we get into the risk to reward end of things, let me know if you guys are following. I might be so wrong at this, by the way. Like, this might actually be so off, but this is just how I'm doing the calculations, and I cannot see any errors in this. The only flaws that I could see in this is if you've chosen a dodgy prop firm and they don't accept your payout, or if you break the rules of the prop firm. So, checking that your prop firm allows holding over news, allows holding overnight, allows what your max risk is that you're allowed to put on per trade, what your max contract size is, what your max lot size is, things like that. Obviously, I'm probably just going to speak to ChatGPT about the rules, but I feel like definitely, like, obviously the rules is going to come into play, but if you pick a good prop firm, like, I don't know, I've heard that FTMO is really reputable. Don't quote me. That was just one that I was looking at. And Fivers, I recommend that you guys do your own research. Don't just go with any prop firm. I would recommend you do your own research, which is what I'm going to be doing. But yeah. Anyway, so when we're looking at things from a risk to reward point of view, I'm going to use the 25k account because I'm sure that might be a little bit more realistic to everyone. I know there's a lot of people that are like, trading a 5k funded account is useless. So we're going to go with the 25k account example. So it's 275.90, but we're just going to say it's 276. So $276 is the amount that the account cost. If you divide that by 6, because we have a 6% drawdown limit, we're risking 1% per trade, so therefore we have 6 trades to work with before we blow the account. We'd be looking at a $46 risk per trade. But you'd be risking on the actual like funded account, with the funded money, you'd be risking $250 per trade because that's 1% of 25,000. So every single time you do your risk to reward, if you're risking, for me, I usually just go for 1-to-1s. So on a 1-to-1, your reward in terms of how much you could potentially make is going to be $250. But when you take a loss, it's going to look like you took a $250 loss, but in reality, because you didn't pay, whatever 250 times 6 is, you didn't pay that for the account. You paid $276 for the account. I don't know if you guys are clocking. I don't know if you guys are following along with what I'm saying. Maybe I need to redo this video with like a pen and paper. But basically what I'm trying to say is that every single time you calculate a 1-to-1, like say you have your little position size calculator on the screen, your profit will go, say you're targeting a 1-to-1, your profit will go to $250 if you get a winning trade, but your loss is really only going to be $46 of your real money. So we're only looking at real money here. Obviously, when you blow your account, if it's a 10k account, I think 6% drawdown. Okay, no, I wrote it down. 6% drawdown of a 25k account is $1,500. We don't pay $1,500 for the trading account. We only pay, for this example, $276 for the account. We're not paying the drawdown. Do you guys get what I mean? So obviously we had the potential to make what we make on the account, like a percentage. Obviously you got the performance fees and stuff like that, but we had the potential to make, risking 1%, $250 per trade. But whenever we take a trade, we're obviously risking hitting that max drawdown limit, and it takes 6 trades to hit that max drawdown limit before we blow the. I feel like I'm over explaining at this point, because I feel like I'm sure that you guys understand. If you don't, let me know. Maybe I have to like put down the math in the description, or maybe if you are confused, write a comment. Girl, what are you saying? And I will reply to that comment with the math, or I will make another video where I actually have it on the screen. But I had this massive revelation, and I basically, to summarize, instead of risking 2% of my account and just going from $20 per trade to $40 per trade, I'm going to take that $20, that 1% increase. So I'm going to be risking $40 per trade, but I'm going to split 50-50. So $20 will be risked on my live account, and I'm going to figure out a prop firm size that's going to allow me to risk $20, around about $20 per trade. Right now, I'm looking at a 10k account. The 10k account costs $135. So if I'm risking 1%, which means I have 6 trades to blow through, $135, which is the account fee, divided by 6, because we have 6 trades until we blow all of that money, that would be $22.50 I would be risking per trade, with the potential to be putting $100 potential profit on the table if I pass the account. Are you guys clocking what I'm saying? If you are not, more than happy to get out my iPad and we can do a little screen recording, a little calculation on the screen. But that's basically what I was saying. And then I literally had here, so if we're targeting a 1-to-1, my loss would look like on the screen, it's going to look like an $120 loss. But in reality, because we're only looking at the $20 loss that I took on my live account, that's real money. But then the $22, 50% of my account fee that I will be losing. Do you see what I'm saying? I feel like it's a little bit hard to explain over, like, verbally. I feel like I might need to do a video talking about it. But potentially I could be making $120, but only risking $42.50. Anyway, a bit of a ramble. I hope you guys kind of understood what I was saying. If you didn't, let me know, and I will do some type of video where it's a little bit more clear. But yeah, that was basically my big revelation for today. I obviously have more that I could potentially talk about with you guys, but that was my main revelation. But anyway, I hope you guys, hopefully you already know that. I'm sure you guys probably do. But anyway, that was my revelation. I hope you guys enjoyed this video. I hope you guys have an amazing trading day, and hope you end with a great trading week. And I will speak to you guys very, very, very soon. Bye.